I'm Megan Horniman, the Chief Investment Officer for Verdant's Capital Advisors. And we're coming to you today to give you a review of what we've seen thus far this year and what we expect going forward for the remainder of the year. From an investment standpoint, investors dealt with really disappointing results in both stocks and bonds in 2022. And what we've seen this year is a complete reversal of that. When you look at a 60% stock and 40% bond portfolio, it's off to its best start to a year in about 10 years. What investors are doing is they're looking beyond what we've seen as very weak economic growth, a likely recession this year, even a banking crisis that we saw in the first quarter, and they're focusing on the fact that the Federal Reserve may be close to being done on their aggressive tightening cycle. Let's take a look at some of the performance we've seen thus far. And as you can see in this chart, what we've seen is that complete reversal of the stocks and sectors that were really hampered by the aggressive tightening cycle in 2022. These are the leaders this year. Take a look at technology. Take a look at the Russell 1000 growth. These are the areas that have rebounded with the expectation that the Fed's going to slow down or be done their tightening cycle. We're right back to the top 10 stocks in the S&P 500, making up about 95% of the total return. When you look at the international markets in red, you can see that Europe and the developed internationals continue to do well. You're seeing the MSCI EFA outperform the U.S. equities for the second consecutive quarter. When you look at Europe alone, it's posting its best back-to-back quarterly gains since 2009. When you look at fixed income, you can see that all the major sectors were positive this year, and that's because people are banking on the Fed being done. So you're seeing credit do well. You're seeing short-term bonds underperform some of the longer-term bonds. And then when you look at commodities, this is the area of the market that's reflecting the expectation of economic weakness. You can see energy had a very disappointing quarter, almost down 20%. And when you look at precious metals, for example, so gold and silver, they benefited from what we saw as a banking crisis in the first quarter.